Good morning. Today is Friday, the last trading day of the week itself. And today in US market, we only have half a day of trading, especially in bond markets. This is getting ready for the next Monday, Memorial Day holiday. And this is the pre-Memorial Day Friday. Basically, we only have half a day of trading. That means going into the long weekend, the market is going to be super thin, and that doesn't mean the market is not going to move. It's just that the trading volume is going to be drastically reduced, and that will increase the volatility as well as the risk. Now, on the US debt ceiling negotiation front, there has been reports that there is a bit of progress being made, and there's every likelihood that a deal may be actually struck over the weekend itself. And this lies where the danger is. This is where the danger lies, basically, because if the market has a deal, or the White House and the Republican has a deal over the weekend when the markets are not open, that means to say following Monday the market is closed. And if the market need to react on Monday itself, definitely the market is going to move first in Asia, and it's going to cause a lot of volatility going forward. So just be very careful holding open positions over this weekend, okay? And for that matter, over the next few weekends. Every weekend is going to be dangerous going forth, because there are so many other issues at stake here. We have the rolling banking crisis that is still unresolved. We have conflict zones that are still getting hotter. We have problems in the Middle East. We have problems in the Far East, as well as the ongoing war in Ukraine. So all these are basically flashpoints, and they can cause markets to gyrate violently. So going into weekends, be very careful. So what we want to do today is to recap overnight what happens on Wall Street. As far as the Dow Jones is concerned, when you look at a 4 hours time frame, we saw the market actually went down to test the low at 32,586, and this is the lowest traded for this month itself, and it's getting very close to my target range between 32,140 to 32,450. So if the market can edge down a little bit, that would be ideal, because that means the market has retraced back a three-wave equality move from a high of 34,257.8. You know, this is a three-wave, and these are classic corrective patterns, and it usually hit the equality range, but not always. Okay, so just watch out for the possible reaction to the upside. There is a very a real possibility that very soon, or if not already, hit the bottom, and the market is getting ready to rally. Okay, so get ready for that. Over in the S&P 500, we can see the S&P 500 on the on Wednesday hit a bottom of 4,104, which I have mentioned previously is an area in which is quite possible that the buying interest actually re-emerge, and it did. Okay, the price actually open high and then trade high throughout the whole of yesterday night, and the price right now has already retraced back almost 50% of the drop from 4,212 to 4,104, and we have seen the market may actually extend higher to challenge the year high, which is a 4,212, which is traded at the beginning of the week itself. So this is where we are. And over in Nasdaq, the market actually was actually triggered by the outsized performance Nvidia, which caused Nasdaq practically to drag out all the tech stocks. And because of that, now we can see the Nasdaq 100 trading at a new all-time high for the year at just under 14,000, which is getting very close to the April high. We were talking about the last April high, and that area is 14,277, which is within the bracket of prices which I think the market will be vulnerable to selling interest, and that bracket is 14,135 to 14,712. So for all we know, tonight we're going to get there. Okay, just be very careful chasing this market ever higher, because this will be a great area to take profit for those who are already long, and for those who have not gone long yet, don't try to chase this market, because it's getting very dicey from a technical standpoint. Okay, over in Asia, we can see that Hong Kong actually continues to drag lower. We can see that we have no update for today, but Thursday, we can see that the price actually hit a bottom at 18,621 thereabout, which is within my range of a three-wave rally. I'm sorry, three-wave technical pullback to 18,256 to 18,737, and you can see this is a three-wave equality pullback. And on the larger degree, this pullback from the 22,700 is not complete yet. For the equality level, the market may actually go down eventually to test the 17,000 levels. But for now, the short term does suggest that there may be a chance for the market to rebound, especially if Wall Street continue to charge higher. But thereabout, we are looking at a possible near-term top for the Wall Street itself. So be very careful about chasing this market ever higher, even in the Hong Kong market. We may see a bit of a bounce here, but again, be very, very careful. Over in the Nikkei itself, we can see Nikkei, after trading to a post-August 1990 high, has pulled back a little bit, but this morning we can see the market is rolling back again. The high so far for the year is 31,352, and not far from my original target, 31,605. Okay, so again, be very careful chasing this market ever higher. I think the risk is disproportionately high if you continue to go long chasing this market ever higher. So be very, very careful about that. Okay. Over in mainland China, we can see yesterday the market actually went down to the year low so far. Not the year low, I think it's the lowest since March of this year, at 3,818 level, which is within my bracket of prices, which I think may actually encourage buying interest to re-emerge. I think it may be the case here. The price range is 3,760 to 3,850 levels, and we can see the market may be able to hold out. So long as the market do not break the 3,805, I think the market have a good chance to rally to at least challenge the near-term support, near-term resistance high here, which is going to be somewhere around here. I think about 4,000 levels. Okay, so again, watch out for this possibility here. Over in the energy market, we see that crude oil continue to slide from a high of $74.69. And near term, if the market continues to slide lower to test the $69.50 range, I think that's getting ready for a good buying possibility here. I'm looking to buy somewhere near the $69.38. If we get a confirmation of a reversal, take it, because the market is going to challenge at the bare minimum the high traded so far this month at $76.07, with the possibility that it may even extend even higher to test the $80 per barrel range. Okay, I'm actually quite bullish on crude oil here. And over in the precious metal, as far as gold is concerned, gold actually went down to 1,936.858 this morning, and it's getting ready to rebound. But you can see that the dollar has been so strong, which correlate inversely to the price decline in precious metals, in especially gold. But now we can say that earlier on I did mention dollar looks like it's about to top out, and is that the case that gives the gold a chance to rebound. So in the near term, if the market rebound, immediate barrier will be 1,985 levels. Okay, just get ready for a possible rebound here in the precious metal market. Now over in silver, we also saw how silver actually managed to go down to $22 and almost 70 cents before it started to reverse. So there's a very early sign of a reversal. You can see that there's an outside bar here in a 4 hours time frame. Now let's go back to the gold market. We also see something very similar. There was an outside bar in the gold market as well in a 4 hours time frame. So taken together, technically speaking, I think the precious metal market is getting ready to rebound. So if you have not have any position, maybe buying will be a good proposition, for at least for the short term here. Okay. In the dollar index, earlier on I did mention dollar has gone up to a high at 104.25, just marginally above my target of 104.05, and it does seems to be suggesting that market may be coming back down. If it does, we could see quite a sizable pullback to as low as 102.40 levels. So there's quite a bit of a drop here. So if the market unfolds in a three-way pattern like this, then I think it will take more than a week to get there, okay, to a 102.40 levels. But by and large, I think the market is getting ready to retrace, okay, as far as the dollar is concerned. Now, if the dollar is starting to top out, the other principal currency looks like it will have a chance to rebound. Over in the euro versus the dollar, the low traded last night was 107.07, and we are beginning to see early signs of a rebound in Asia trading hours. Top side, I think for the time being, the barrier to higher prices is to overcome the April low at 107.88, which is now the resistance line. and possibly over a little bit higher to 108 to 108.50 level. So this is as much you can expect for a rebound in euro. Now, for the matter, last night we have the release of the Germany Q1 GDP numbers, and it came in negative as well. So Germany has on record 2 quarters of negative growth. Technically, it is already in recession, and this is definitely a wet blanket for euro dollars, because Germany is the largest economy within the eurozone. So if Germany is already in recession, the rest of the other eurozone economies will not be too far behind, and if that's the case, it will be a negative for euro dollars, okay, for the euro dollar here. Okay, over in the sterling, you can see a bit of a rebound as well after market hit a low of 123.09, and now the market is looking to be a possible chance for it to rebound. Top side is about 124 half levels if the market ever rebound. Okay, over in the Aussie market, we can see the market hit a low of just under 65 cents, and we have a bit of a tentative holding up. Top side again, very similar. We're going to see the March low, which was previously at 0.6565, acting as a resistance for now. And even if they can pass by that 0.6565, if they have to contend with this black line here, which I have drawn previously as a support line, now obviously it has turned resistant. So anywhere between 0.6565 to 0.6580 is going to be hard to overcome. So that could be a selling opportunity if you want to continue to sell the Aussie dollars. Over in the Canadian dollars, as much as the dollar index looks like it's about to peak, dollar index, the dollar versus Canadian looks like it's also tracing out a similar pattern. We have a 3-wave rebound from a low of 1.3315. Now the market has hit a high of 1.3655 overnight, and this price here is very close. In fact, it is just marginally below my bracket of prices in which I think it will be vulnerable to selling interest, and the area is 1.3660 to 1.3720. You can see that the market is getting very close, and there's a very good chance if market goes into this bracket of prices, the odds will be in favor of shorts rather than long. Okay, over in the dollar yen, we can see the dollar yen has just took out last December high of 139.90. Okay, and the high traded is 140.23, just marginally above. It just missed my target range so far at 140.65 to 142.35. So if the market goes into this zone of prices, look out for selling interest. So overall, when we look at the dollar as well as the other cross rates, it all suggests that there's going to be a simultaneous revision, we call it inversion. Okay, dollar looks like it may actually come back down, whereas the other major currencies looks like it may actually bounce higher. So this is what I think it will happen in the FX market. As far as the Bitcoin is concerned, Bitcoin actually went out to a low of 25,878 on Thursday, and I mentioned that this is a good price to buy because there's a range here of 25,880 to 26,190. That will be a great area to pick up buy, and true enough, we see buying interest emerging from there, although it's still very tentative. But if market can sustain, okay, then the target here will be 28,240 to 28,700. If this market surge past the 29,000, it's going to go straight for 30,000, with a possibility that it may even extend even higher over the mid to long term. Okay, 31,000 is going to be a target, as well as 33,000. So this is the very optimistic outlook for Bitcoin as a whole. Okay, so do look out for all this possibility. Remember, tonight is half a day of trading. Market is going to be super thin going into the weekend, and Monday is definitely a holiday for United States. So don't expect market to open on Monday night. Okay, so in the meantime, you have a great weekend ahead and be safe. Bye bye. Take care.